Hello, everyone, and welcome back to another episode of the Let's Get Technical series. I am making a video after almost 3 weeks because, well, I have been going through a personal journey. I gave birth to a beautiful baby daughter on 29th of November, and I'm 12 days postpartum, recovering pretty well. Baby's doing pretty great. I've been looking at charts, doing my trades, but creating content was something that really fell in the back burner. But now that I have some time on my hands, I thought I will quickly show you how to trade a positive divergence when you see one. Right? So when we see a positive divergence, we have to always remember that one of three things can happen. Either the positive divergence plays out the way we expect it to, that is, it leads to a trend reversal and a rally. The second scenario is that it does give a temporary reversal and some rally, but not a full-fledged beginning of a new trend as is the case in scenario 1. So in scenario 2 it will give you a small rally, and the third scenario is that it totally fizzles out. It gives you no positive upside whatsoever. So these are the three possible outcomes that you should have in your mind. So obviously 2 out of 3 are pretty favorable in this one. The first scenario is very favorable, where you see a proper trend reversal, higher high formation, a bull trend starts. In the second scenario, there is potential to make some profits or at least exit the trade without any loss if you're doing strong risk management. In the third scenario, if you're doing risk management, your loss will be limited, but pretty much the downtrend is going to be so strong that you might not be able to make a profit in that. So let's take this example of Union Bank, where a positive divergence in 75-minute time frame had shown up, and I want to show you how I traded this stock. So on 24th October here, you can see this is a green arrow if you're able to notice. This is where I made a note of this positive divergence. Now, if you notice, if you will pay attention here, this positive divergence that has been marked, this was visible as a positive divergence at this point. It was visible as a positive divergence at this point. It was also visible as positive divergence at this point. So just seeing higher low on RSI and a lower low on the price is not equal to positive divergence. Let's put our money in. You have to wait for some confirmation. What is the confirmation that you can wait for? So we will refer to the higher time frame and the lower time frame for this purpose. So the first thing that I like to do is take an assessment of the slightly larger trend. I'm going to delete this note here. You have to take note of the slightly larger trend, one time frame higher. So what does the daily time frame tell you? Tell me here that the underlying trend is pretty bullish despite of this decline that had been unfolding around 40%, 35 to 40%. Despite of this correction, if you look at the broader trend, it has been pretty strong. Okay, noted. What is happening around this point? 24th October is when I entered. So what is happening around here? The 250 EMA, the 100 EMA, both have been breached. Price is going down. On the RSI, if you see, level of 30 was still getting approached. Coming back to the 75-minute time frame, the positive divergence that has been forged here. So if you see this entire leg, we've been getting an indication that a potential price reversal is coming up. What we need some sort of volume confirmation. So up to this point, up to 22nd October, if you see, volume on the upside was not that significant. It's after 22nd October that we started seeing some uptick in volume on the green candles, which means that the price and the volume, the participation, they've started going hand in hand, which means the increase in price is getting support from participants, or it's getting a positive thrust from participation, which is good. Now, in order for us to do a more precise execution, it's important to pay attention to one time frame lower, that is a 15-minute time frame also. So what are we seeing on the 15-minute time frame? If I delete this line, we saw that the true low was forged back on 7th of October on the 15-minute time frames RSI, right? Since that, the price has continued to go down. But if you look at the RSI is maintained on the 15-minute time frame, it has maintained itself above the level of 40. So let's draw this line, okay? It has pretty much maintained itself above the level of 40, which is positive. But if you look at the upside, it has also maintained itself below the level of 60, which is not so bullish, because 60 is the resistance of the bearish momentum when it comes to the RSI. Pay attention to the volume here. So this is the histogram representation of the volume using the MACD, and this is the fast length and the slow length. All you have to do is change the source to volume and signal smoothing to 50. And this is the style. Now, if you will see here, the increase in prices, see here the price is up, so is the volume. Volume has caught up. Here again, the price went slightly down and the volume caught up. This was an indication that price is going to continue to have some more correction. This second leg of price correction, if you see, here the volume slightly went down. Again, the price went up and the volume really caught up pretty strongly. So first leg, second leg. First leg, volume increased, indicated more correction to come. More correction came. Volume did not increase. Volume increased when the price went up, indicating that, okay, I'm done with correction. I am interested in now going up. So when we see this kind of thing where the volume increase did not happen against decline and volume increase happened against price increase, right? That is our indication that now we might want to go up. So what did I do? I created my position around this level here. This another leg of rally. Why? Because I was expecting a breakout to come. And then where was my stop loss? My stop loss was a little bit below this low level. You see here. So I kept some buffer there around 0.5% and I kept my stop loss over there. Now, there are two things that you can do to create a position. Now we've come to the main meaty part of this video. In order to create your position, you can either place an order exactly at the same low. So let's bring a stop loss back. So you can either we'll use this white line to potentially place our orders. So you can either place your order here at the same low as the previous price. So this white line indicates that. Let's also add the price label, or you can wait for confirmation. What would be your confirmation? That a higher high gets established. So for a price over here, a higher high getting established would be the price moving above this yellow line over here, 111. So once a higher high is established, after that, you can place your buy order at the previous high and expect a pullback. So what is a pullback? A pullback is after a breakout comes. So this is the breakout. So after the breakout comes, the price typically has a tendency to give a pullback to retest the breakout level and then shoot up. So this would become your entry point, right? So if you are risk averse, if you like to avoid taking unnecessary risk, a higher high breakout and a pullback is what you should look out for. But if you are okay taking risk, so I'm personally very okay taking risk. So when I see a good setup building up and if I see the risk reward ratio is way more than 3, I will go ahead, place my stop loss and I will take the risk over there. Okay. So place the risk, place your order, place your stop loss, go ahead, purchase the stock, and then what? How do you set your target? So in this situation, since I am playing the positive divergence on the 75-minute time frame, my minimum target is the previous high, right? So the previous high here on the 75-minute time frame is this level. So this was my target. So with an entry here, a stop loss of around 4% and a target of around almost 16%. So I had a more than 3 risk reward ratio. I went ahead with the trade. Like I said, had I placed a buy order at the level of 107, my stop loss would have remained the same. My risk reward ratio would have become even more attractive. But that's not what I did. It is an alternative that can be done. So either you place a buy order at the previous low or you wait for a higher high breakout and place an order after, place the order at the level of the pullback, which is the previous high. Now, what if you notice this positive divergence, right? But you ended up not playing it at all. What do you do? Typically, there are 3 legs of upside, as we know in the Elliott wave theory. In this stock, Union Bank, you will notice that the RSI positive divergence was forged. One leg of upside came. So this was the first leg of upside. This got unfolded. The high got forged here and then the correction came. Now notice where the correction has taken the RSI. It has taken the RSI on the 75-minute time frame back to the level of 40. Why is that significant? Because 40 is the level where bullish momentum takes support. That is where it went. Price wise, what is this level? it is the level of the breakout. So this is where the higher high got forged. This is exactly where the pullback came. So we saw a 15-minute time frame pullback unfold over here, a small pullback on the 75-minute time frame. Also, if you see, the pullback did happen after a higher high breakout. It's just that you have to be more patient. You have to be 5 times more patient on the 75-minute time frame. So it took 21 days for the pullback to unfold. You leave a buy order here at the higher high breakout level, and then you are able to play the next leg of upside here, another 16%. Very ideal swing trading would lead you to make around 14% in 14 days in this, and then another 16% over the next 22 days with this setup. You have to be patient, you have to be strategic, and you have to be very unemotional in order to win these kinds of setups. For me personally, now profit booking has taken place. What I will do now is I will set an alert at the level of 41 on the RSI. I use the keyboard shortcut Alt A after clicking on the RSI indicator to quickly set an alert here. And I'm going to wait. Now, I think there's going to be another leg of rally. Why? Because this entire upside has been backed by pretty strong volumes, right? If you look at this entire upside also, it was also backed by, it actually wasn't backed by a lot of active volume growth. This leg of upside, however, has been backed by a lot of active growth. So one alert would be set at the level of 40. However, it is not necessary that the level of 40 will get tested if the momentum is very, very strong. What I would also like to do is I would like to set an alert at this blue line, which is the 20-day EMA of the daily time frame. So EMA 1 day 20 close. So if the price crosses EMA, then I want an alert. So when the price will decline enough to touch the 20 EMA, then I will take a judgment call of whether or not I want to go in for this position, or whether or not I want to re-enter. This is what I wanted to discuss with you with respect to how to play a RSI positive divergence. I hope you like this video. Don't forget to join my Telegram community, Trade with Kavita. Let me just show it to you how you can do that. So this is my Telegram channel, Trade with Kavita. I don't know if you're able to see. All you have to do is hop over to Telegram, Trade with Kavita, and join my channel. That you might come across some fake channels running with my name, misusing my photo. Unfortunately, there's not much I can do about this, but I will request you to, be mindful and join the correct channel. Just make sure you take a glance at the content. And one good news that in order to celebrate my baby girl Ava, I am giving out 2 months free subscription to all active members. And even if you enroll before the 16th of December, you will be eligible to get the 2 free months. Doesn't matter whether you take the quarterly subscription, 6 months, 12 months. Everybody with an active plan up to the date of 16th of December will be eligible for the free 2 month extension on their membership. Right? So if you want to trade with me, if you want to do swing trading with me, with my recommendations analysis, if you want to work with setups like the one that I just showed you on Union Bank, then be sure to join my Trade Together program. So thank you so much for watching. I will see you again in the next Market Outlook video. Until then, happy trading.